All right, let's talk about good signs to look for when the market pulls back to an area of supply and demand. And today we're talking about demand because one of the most key concepts that you must master if you want to become profitable and be a great trader is market structure. A lot of people think that you have to have a bunch of indicators to trade from your charts, and people or these companies or individuals that are creating all these indicators are trying to sell you something, claiming that they are the holy grail that will be the difference of you failing or succeeding. Hey, buy this indicator and you're going to become rich overnight. That is, I'm going to tell you, to be honest with you, that is the absolute not the truth. Okay, you do not need any indicators on your charts to trade with. Think about it, because years ago, when older traders or people who have experience in trading and been trading for years, all these fancy indicators didn't exist. It was pure price action, understanding structure movement within the market. Is it breaking structure? Is it creating areas of where aggressive buying zones or selling zones are created? You can see the institution footprint on the charts, like I talk about all the time in my videos. So if you simply understand market structure, you're always going to be in the right direction, especially when taking trades. Now, I'm not saying every trade is going to work out. I'm just saying it increases the probability of your trades working out if you're taking trades in the direction based on what a higher based chart is doing, whether it's time-based chart, range bars or range charts, whatever the chart styles you actually or types you actually trade. Now I'm going to go to a 120 range chart. I just want to show you this right quick because you have to be able to see what is going on here and what took place. When the market was making these lower lows and lower highs to the downside, and then, we get down here to the 19th, and then we see, this is what I'm talking about, structure breaks. We see the market break above this area at 207, and it continues to run to the upside, breaking above a major area, another area structure right here at 550. Let's see, 550. Okay. All right. That's 17,550. So we're breaking structure to the upside. And as long as we continue doing that to the upside, then the market is very bullish. Okay. It pulls back here, then we get another break of structure. It pulls back here, then we get another break of structure. You have to be able to see these ebbs and flows. Low, break structure, high, higher low, okay, break structure, high, higher low, breaking structure to the upside. So this morning when I was looking at and looking for opportunities, my only idea or bias was to go long. All right, and we're talking about today a simple technique that you can use in your arsenal when this actually helps you when the market pulls back to a key area of demand, because we're talking about demand, because we're bullish to the upside. The market is breaking structure. So when we move down to a lower base chart to start marking zones, and I use my 60 range chart and I mark this, even if you zoom out here on excuse me, what I'm trying to say, the 60 range chart, you can see we're breaking structure clearly to the upside here, okay, on the 60 range. So when it broke structure above this area here at 17,830, look, there are demand zones resting back. These are zones, okay, or swings, all right, small internal structural breaks to the upside that took out this high right here, this major high right here at 17,830. This is a demand zone resting right here. There's a demand zone resting right here, and there's one back here. Now, this is the leg to the upside right here, all right? So, typically speaking, what we look for, I'm going to just show you, I don't trade, fibs. I'm just showing you from a fib standpoint right here. This was a push to the upside. Now, the 50% area is right here. The 76.4% is right here. I don't trade fibs, but I've talked about looking for pullbacks to key zones. This right here would be an area of where prices at a discount. So typically speaking, the institutions will love to come back down to these areas to get into a cheaper price or cheaper area to continue moving the market to the upside, and we're falling in direction with the higher base chart. But they do not always do that, and it's not always going to happen that way, okay? You always have to look for rejection. Rejection is the key that will allow you to get into a trade, whether it's for a quick 10 point, 20 point scalp, whatever the case is on the NASDAQ, all right? So, and even on the ES or whatever other market you choose to trade, but always remember that they're always not going to pull back to at the 50 or 76.4. We're looking for rejection. There were multiple demand zones resting within this leg that broke structure to the upside, all right? Now, liquidity is a key factor as well when it comes to trading, because we do want to see some area of liquidity be taken out before we look for opportunity to take a trade. But again, they're not always going to 100% grab liquidity, which they did a little bit here if you take close attention. Pushed up, pulled back, broke structure to the upside. They came back on the move to the downside, grabbing an area of liquidity, tapped into this higher base demand zone, and then kept running to the upside. Because when the market's trending and we're in a very bullish market, a lot of times they're not going to, they may not come all the way back down to this area and continue taking out or running stops and grabbing liquidity to push the market up. I mean, if they're bullish, they're bullish. They're going to keep pushing in one direction. So what I'm talking about when it comes to rejection, we're looking for candle rejections in the sense of back at a zone. And I talked about range bars in reference to traditional candlesticks in a video posted a few days ago. So please watch that video as well. And look, what happened here, when I saw we got this break above 17,830, all right, and the market pulled back, I noticed this was an area of demand. Yes, it was on the upper portion of the leg, or the higher portion of the leg, but still it was a demand zone. Aggressive buying to the upside. That's all demand and supply is, supply and demand, how you want to say it. And if you don't know much about supply and demand, please spend some time watching the videos here on this channel or maybe somewhere else, okay? But I have a lot of videos that cover valuable content here on this channel. If you're not a current subscriber, I would highly recommend, you spending some time watching the videos and becoming a sub here on the channel. The information here is, that I give out is very valuable, and you can find your way to becoming consistent and profitable just while watching the videos. I'm telling you this because we have successful traders that are passing prop firms, that are taking withdrawals, that have found success in this simple strategy, which I have shared across this channel, across this platform. So please do yourself a favor, hit that subscribe button so that you always, when I post a video, you're getting these uploads, okay? So you can sit back and watch these great videos or this valuable content that I'm dropping. All right, so look, when the market comes back to a key area, we're talking about rejection, looking for signs based on what's going on in reference to momentum. Well, of course, we're trending to the upside. If we got structural breaks to the upside off the higher base, again, we're only looking for demand setups. The market pulls back to this key area of demand. When it got back here, look what happened here. Pay close attention. There are orders resting here on the table. This is a fresh zone. There's imbalances. There's a gap back at the zone. There's got to be orders resting here because they pushed the market hard in one direction and broke structure. Okay, so breaking structures are key to what I look for when the market is specifically pushing in one direction. And if it's breaking structure to the upside, then of course demand. It pulls back to this sweet area of untested, demand. All right, and look what happened here. Remember, if you are someone that's already been watching the channel, you probably know what I'm getting ready to say. What happened here? Was there a closure of any bar or candle that closed inside the zone? No. Let that be a sign to you that they are more than likely, with this aggressive buying, still interested in pushing the market to the upside. They didn't close inside the zone. They wicked the zone, the candle that tapped the zone, wicked away from it, and the body of that bullish candle closed to the upside. All right. Now, if you're someone that didn't get aggressive on this trade, but said, oh, I'm going to wait to see the next candle that forms and see what happened. Well, look, the next bullish candle to the upside, look what it did. It came back to the zone. No body of that candle closed into the zone. It wicked away from it in the closure of the next bullish candle closing to the upside above the previous bullish candle. So two bullish candles that wicked at the zone, and one closed above the other bullish candle is a good sign, that the market is still wanting to push to the upside with great momentum. So allow the candle wicks at a zone, without the bodies closing into the zone, be a telltale sign that they are more than likely trying to still move in the same direction. Because we're bullish to the upside. Now, that's not always going to be the case, and it's always not going to happen like that 100% because your trading is based on probability. But this increases the chances, the probability that we can get into a trade to go long. So use that as a tool or technique, or, that you can, when the market gets back to a very valid zone, in this case here, because this was bullish, moving to the upside, lots of buying. You have to think in terms, what are they doing? Are the orders still resting on the table here? Yeah, because the market didn't come back immediately to this area. Let's just say, for example, if the market did this right here as it was pushing up and then came back, tested the zone here, then pushed up, and then came back to this area again, well, that's not going to be more so a high probability zone for me anymore because they've already tested it. It's going to be more so on the low side. Now they can still reject that zone. Of course they can, because we don't control the markets. They're going, the institutions are going to do what they want to do. But I'm just telling you for, just use it for your own means of a tool to put into your arsenal and use it as a technique, part of a strategy. All right. And what you can identify as far as terms of rejection, looking at candles. All right, and using it as confirmation when the market gets back to a valid zone, you can use this technique. All right, so I just want to share that with you guys today. I've talked about it in the past, but simply pay attention. But one of the biggest things, please understand and master market structure. I know I kill that term all the time and talk about it because it is essential. I'm telling you this. If you ever heard anybody tell you and try to stress something to you and tell you that do this in the right way, this way, and it will work correctly, okay? That's the truth. So understand what I'm saying. Understand and master market structure, and you will watch your win rate increase, the probability of trades working out more in your favor. You'll stop taking as many losing trades, and then you'll start to see, oh, I'm consistently in profit each and every day, and I'm able to hold my winners and make more in profit. So just please do yourself the favor and master market structure. But again, we're talking about candle rejection. I just want to share that with you because it's just a simple technique that you can use, all right, when the market gets back to a zone. And it's the same thing in reverse when we're talking about supply. Market rejects a supply zone, wicks out at the candle. You don't get the candle close into the zone, and you get a wick, and then the next candle forms and wicks away from it again. It's a sign they want to move to the downside. So just let that be food for thought, okay? But anyways, I'm going to go ahead and wrap the video up here. I appreciate each and every one of you who continuously watch the videos on a daily basis. I thank you everyone who's a current subscriber. And please share the video content, all right? Share it with your social media platforms, your friends, your family, anyone you know that maybe would be interested in understanding or wants to understand supply and demand, or maybe you want to help someone out and share with them, hey, I'm profitable, and maybe you know someone that wants to become profitable just as well. Share the video content with them, all right? There's a share button, a tab right here on the video that says share. You can share it with your social media outlets as well. So, that helps the community, and it helps the channel grow, and it helps me be able to get to and reach people and help them, show them a way of how I trade. I'm not telling anyone to trade like me, but someone may be interested in this video content that you may know. And that's why I started this channel, was to share what I know. Okay. If you're knowledgeable about something, you have a little wisdom about something, share it. That's part of life. That is one of the most important reasons why we're here. Okay, to help people along. All right, don't be greedy and hold it to your heart and keep it on the inside. Share. I believe that some of the biggest blessings in life the biggest blessings in life do come from when we share with other people about things that we know that someone else may be seeking answers to. Okay, they may have that same question. But anyways, please, if you're not a current subscriber, please take the time to go ahead and click on that sub button. Make sure to turn on all your post notifications by clicking on the bell. And last but not least, please drop a like on the video if you found value in the content. And if you're interested in joining the Discord or becoming a elite channel member, you can find both links down in the description portion of the video. The first link is to the Discord. It's free to join that. And then the next link below it says become an elite channel member. Click on that and you can become an elite channel member. Okay. But anyways, that's all I have for you guys today. It is moving to the weekend. Today's Friday. I'm probably wrapping it up and probably be done for trading today because I noticed we're kind of just moving sideways right here. We may break this area structure and still we're bullish then, okay? This is on my 60 range chart. But either way, have a fabulous weekend. I'll see everyone into the next trading week. Take care.